Ladies and gentlemen, good day and welcome to Q2FY22 earnings conference call of IOL Chemicals and Pharmaceuticals Limited, hosted by Antique Stock Broking Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Manish Shah from Antique Stock Broking. Thank you, and over to you, sir.
Thank you, Margaret. Good afternoon and welcome to IOL Chemicals and Pharmaceuticals Q2 and H1 FY22 results conference call. Today on the call we have Dr. Sanjay Chaturvedi, CEO, Mr. Pradeep Khanna, CFO, and Mr. Abhay Singh, VP and Company Secretary. I now hand the call over to Dr. Chaturvedi for his opening comments. Thank you, and over to you, sir.
Thank you, Manish. Good afternoon, everyone. I thank you all for taking the time to participate in this earnings call. Trust you all had the time to read the earnings document, and I'm certain you will have many questions. But before we take up these questions, I would like to shed some light on the industry, what is our business, and kind of share my perspective on the performance of the quarter that has gone by. And subsequently, my colleague, Mr. Khanna, the CFO, will provide a lot more granular details on the financial performance. So this past quarter has been one of the most challenging times for the pharma industry. APIs in particular have been negatively impacted due to the increased raw material prices, the rising energy and logistics cost. Demand and volatility have further added to the woes. We believe that these to be temporary phenomena, and this is not a structural change in the market. Therefore, we do expect that this will correct itself in the coming quarters. During this quarter, we successfully received the approval of the Korean Ministry of Food and Drug Safety, the Korean FDA, for the company's API products of ibuprofen and fenofibrate. The approval of the Korean FDA reestablishes the company's efforts in keeping the highest quality standards and to increase our presence in the regulated markets. This will strengthen our presence in the South Korean market. Coming to financials, the company had a muted growth during the quarter. The margins have been in stress on account of volatile input costs and relatively flat demand in ibuprofen. Despite the strong headwinds, the company made good progress in some areas. The chemicals division continues to demonstrate a stable business with respect to volume. The business for non-ibuprofen APIs has delivered strong growth, and overall we have regained business in export markets compared to the previous quarter. With this, I would like to hand over to my colleague, Mr. Pradeep Khanna, the CFO, who will be talking more in detail. Over to you, Mr. Pradeep.
Thank you, Dr. Sanjay. Good afternoon, everyone. A warm welcome to IOLCP second quarter financial year earnings call. I will take you through mentioned highlights for the quarter 2 financial 22. The total revenue for the quarter increased by 2% to rupees 548 CR as compared to rupees 538 CR in quarter first of financial year 21. In quarter second of financial year 22, EBITDA was at rupees 63 CR, and in first half of 22 was at 170 CR. Similarly, EBITDA margin in quarter second of financial year 22 stood at 10% and 16% for first half of 22. Depreciation for the quarter was rupees 11 crore and rupees 21 crore for first half 22. Profit after tax for quarter second of financial year 22 stood at rupees 31 CR and rupees 98 CR for first half of 22. PAT margin for second quarter was 5.6% and for first half of 22 was at 9.1%. With this, I would now request the moderator to open the forum for question and answer session. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and one at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashish Rathi from Lucky Investment Managers. Please go ahead.
Thank you for the opportunity. Just wanted to check, on this whole raw material price increases situation. To my understanding, some companies are saying they had inventory and the real impact is not visible in this quarter. And going forward, further and more serious impact will be visible in third quarter and fourth quarter. Where do we stand on that?
Okay. So I would say on the raw material front, there was some increase in raw material pricing. Some of that we have been successfully able to pass on to customers, and that will be reflected in the coming quarters. For some other areas, we are seeing a correction in the raw material pricing already in this quarter. So we do expect that this is a temporary blip that will correct itself within the next 1 or 2 quarters. And so your second part of the question was on inventory. So we don't have any issues with inventory. It's pretty much under control for us.
Sanjay, what exactly do you think is the reason for this? I mean, and why do you think it's a temporary blip?
Okay. The reason I call it a temporary blip is that even if the raw material prices continue to be high, we will be able to successfully pass along that cost increase to customers. So it will be a pass-through charge. It's a bit like if you look at ethanol, the ethanol prices have gone up, the acetic acid prices have gone up, and so have the prices for acetic, ethyl acetate. And so we've been able to pass that along to customers. Similar things happen on the API front as well. So there was some product, for example, in pantoprazole, where the intermediate prices went up, and we've been able to pass along that cost increase to customers. As the DCDA prices went up in metformin, we were successful at passing along the cost increase to customers. And there was some marginal increase in costing for ibuprofen that we were able to successfully pass along.
Sure. If I look at your 1H21 versus 1H22, and the mix of ibuprofen, other pharma, and chemicals in that, last year versus current year, the growth in the other pharma molecules, also, on a percentage basis is not the right way to look at it, because obviously your base is much smaller. You see a 90 crores number going to 140 crores number, assuming there's a 1,000 crore top line that has been maintained YOY in 1H.
Correct.
So you've been indicating in the past that a certain reason that, because of non-approval of facilities and no inspections happening, we've seen a delayed ramp up in this.
Yes.
How will this shape up in the future? What kind of traction can we expect? Any update on timelines for inspection and approval?
Yeah. So some of those inspections have come in, and I was alluding to customer inspections and regulatory. On the regulatory front, we've had quite a few CEPs that we filed. Some of them have been approved. I would say that the 90 crore number that you see ramped up to 140 crores is real. And we are expecting, certainly, maybe 330 to 350 crore kind of top line coming into the non-ibuprofen business for us this year. And next year onwards, we are very confident that you will see, a substantial jump in that figure.
300 to 340. This is excluding ethyl acetate also, I believe, right?
Yeah. This is only the non-ibuprofen APIs. My discussion, my answer was limited to non-ibuprofen APIs for IOL.
So roughly 190 crores is what you're indicating for the second half. There is not much pricing, disadvantage on this side. Is only limited to ibuprofen? Because I heard metformin and other molecules have also seen a big vomiting.
No, you're absolutely right in that. The pricing pressure has been across all product lines, and in certain products we are able to pass along the price increase at a faster rate than we are able to do that for others. So, we specifically keep ibuprofen aside because that is such an important part of our portfolio. Not that the pricing dynamics and the raw material dynamics are any different, but just because it happens to be a big chunk of what we do, investors are generally keen to talk about these things separately.
Sure. And last one from my side, then I'll join that Q&A have a few more later.
Sure.
If you could specify ibuprofen raw material price increase and top three, so basically metformin, maybe Banta, I don't know how much is that contributing now. And in terms of price increase, what we have seen from say last year's quarter, so 21 second quarter to this quarter. In terms of percentages, what has been the increase?
Okay, I would say that ibuprofen has seen very modest price increases and cost increases compared to, say, metformin. And all in the single digits, I would say, in terms of percentage basis. Whereas in metformin, the price increase for DCDA has been almost, more than 200-300%. And that is now starting to correct itself. So there was a lot more volatility in metformin than in ibuprofen. And for intermediates in, say, pantoprazole and clopidogrel, the number was kind of in between.
Just winding up this point, so basically you're indicating that ibuprofen gross margin dip is not exactly because of raw material price increases, it is mainly because of the pricing decline of the API itself. Is that the right way to look at it, the selling price?
I would say it's a combination of multiple factors. One is the raw material price that goes up, and as I alluded to earlier, the raw material pricing going up is marginal pricing cost increase. The second issue here is the pricing and the end price, and most important is the end demand, because if I look at the kind of volumes that we did last year versus what we've done here, they've been off, and therefore if I look at when you have a lower demand and you have lower production, your asset utilization goes low, and therefore your cost of manufacturing goes up. So, these are, I would say, a series of interlinked events. For our ibuprofen business to do well, really what needs to happen is the demand has to come back. And we do see early shoots of that in Q3 and both Q4.
No, but the gross margin doesn't get impacted by the demand per se. I mean, it doesn't impact the below the gross margin. It does impact the below gross margin line. Just asking for the gross margin. So it seems there is a big pricing pressure on the selling price of ibuprofen also this quarter.
Absolutely, yes. You're right.
All right, I get back in the queue. Let others ask the question. If at all I need any more, I'll come back. Thank you so much.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of B.R. Vora from Third Eye Realty and Consulting Private Limited. Please go ahead.
Hello.
Hello.
So I had one question. It was what characteristics, except for backward integration, make our operations so good that even bigger companies do not eat up our market share? And will we be able to replicate this success in other APIs we're manufacturing?
So I think that's an excellent question and a very insightful question. There are a couple of things that we do that are different. One is, of course, the backward integration that I talked about. The second is the scale. So, for example, if you look at clopidogrel, we typically put in capacities that are significantly larger than what our peers do. And the third, of course, is because of that high volume, the pricing that we are able to negotiate for raw materials with our suppliers, we get some kind of an advantage on that. So I think rather than look at it as what is the one thing that I do better, what I would focus on is what are the many things that we do better so that they all add up to something substantial. And the short answer to your question is, yes, we believe, we are confident that we can replicate that success into other APIs.
Okay. And I had another question about our capital deployment. For all the cash we are sitting on the balance sheet, which is about 350 crores, how do we plan to deploy it? Because in the earlier conference calls, we were expecting some guidance towards it in the quarter 3 to quarter 4 conference calls. So do you have any more insights on that?
Yeah. So we are in very advanced stages of finalizing our investment plans, and I would say by the end of this quarter or early January, we'll make those available to all our investors.
Okay. Thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Mohammed Ayaz Sheikh from Aman Investments. Please go ahead.
Good afternoon, sir. Thank you for the opportunity.
Sure.
Sir, while seeing the investor presentation, I was seeing that the chemical segment has contributed the most in the revenue, but while on the EBITDA side, there was very less contribution. May I know the reason, sir?
Yeah. So, on the chemicals, typically the business where the margins to begin with are substantially lower than the chemicals. So, therefore, your ability to purchase raw materials is really what determines the profitability. And we had certain lots of raw materials that we had picked up at a higher price, and that is what impacted our profitability. But we do expect to come back to more reasonable profit levels in the next coming quarters.
Okay, thank you, sir. And another question is, sir, you have in last conference call you have told that the Q3 and Q4 we are seeing very good export and very good revenue from export. So are you still you are on your words still, or there is some difference on the export side in Q3 and Q4?
There is no. So now there is no change in the guidance. We continue to be very positive on our exports, and you will continue to see good numbers coming in both in Q3 as well as Q4.
Okay. And sir, how much EPS or EBITDA you are expecting in FY22?
So right now we are not giving out that information. A lot depends on, you've seen the volatility in this market. What we are really focused on right now is delivering top line, keeping our costs very tight under control, and that will really determine what the end profit levels will be.
Okay, sir. So one last question is, sir, just I was saying that we are having the single location manufacturing facility for both chemical and pharma. So, do management have any think of company should have any another manufacturing plant at another location to de-risk the single dependency at single location and to help export transfer to help the transfer of the export to the foreign countries?
Absolutely right. If I didn't know better, I would say you have bugged my conference room. So all those discussions are ongoing, and as I said, by end of December, early January, we will make some of these plans known and available.
Sir, my questions are increasing, but I would like to ask that what we are doing for the cash we are having in the reserves.
So we are putting together an investment plan for deploying the cash that we have. We certainly believe that by deploying that cash, we can give a better return than what we can get by putting that money into an FD. So I think those are the plans I was alluding to earlier, that by end of December, January, those plans will be made available to all our investors.
Thank you very much, sir.
You're welcome.
Thank you. The next question is from the line of Bobby Jairam from Falcon Investments. Please go ahead.
Yeah, hello. Has the demand for ibuprofen decreased because of inventory excess, or has there also been some sort of substitution to other molecules?
So two things have happened. One is there was in the previous financial year and the first quarter of this year, there was a lot of overstocking. And, if you look at the kind of volumes that customers picked up during the COVID year last year, it was unprecedented. That is the reason why the demand has been muted. The second reason why the demand has been muted is, as I've mentioned in my earlier calls as well, there was report that came out from a French group that talked about ibuprofen not being very good at managing COVID and, other products being better. So, clearly you've seen paracetamol has picked up at an unprecedented pace worldwide. And part of it is because of COVID management. Subsequent reports are suggesting that both ibuprofen and paracetamol are very good at COVID management. So I do believe that the demand for ibuprofen will pick up. But in the light of the report that came out, this demand went down at the cost of paracetamol picking up.
Right. So when do you think, are you seeing any signs of it stabilizing? Because COVID is more or less now, intensity has come down for COVID.
Yeah, so yes, we have seen signs of that stabilizing. In fact, this previous quarter, Q2, was in terms of volume and demand offtake perhaps the lowest. And, our numbers in October are good, and based on our visibility for Q3, Q4, we are confident that the demand will pick up.
Okay, well, thank you.
All right.
Thank you. The next question is from the line of Chintan Chedda from Quest Investment Advisors. Please go ahead.
Thanks for the opportunity. Good afternoon, sir.
Good afternoon.
Yeah, so my question is related to isobutyl benzene. So now, when we look into the current environment, the other API inventory in intermediates like your para-aminophenol and DCDA, their prices have gone up by 100 to 100%. But relatively, your IBB prices are fairly stable. So just wanted your outlook on the demand and pricing for this particular intermediate.
Mm-hmm. So, you rightfully pointed out that the demand for other intermediates has gone up substantially more than IBB. IBB is very closely related to crude. And we don't expect the IBB prices to have as much volatility as the other products. And in light of the other products, we are doing a lot of efforts in terms of backward integration and ensuring that, we are sufficiently backward integrated in making the other intermediates where we can. So DCDA right now, I don't see an option not only for us, but for any other player. We continue to be dependent on China. But some of the other intermediates, we have alternatives to develop the intermediates ourselves.
So with IBB, is there a situation wherein there is an overcapacity globally for this intermediate?
No, we don't believe that. Right now, there are only two major suppliers of IBB, and we don't believe there is an overcapacity issue.
Okay. And sir, in terms of, so it would be fair to assume if the prices of IBB continue to remain stable at these levels, even the ibuprofen prices will hover around, say, $10-12?
Yes, that's a very fair assumption.
Okay. Thanks a lot, sir. All the best.
Thank you.
Thank you. The next question is from the line of Ashish Rathi from Lucky Investment Managers. Please go ahead.
Thank you for the opportunity to follow up. Okay, I have a few questions. One is, which all products do we have like a backward integration advantage in our kitty?
Okay. So, other than ibuprofen, we are currently, we are working on intermediates. So I don't have that advantage today, but in the coming few quarters and years, I will have that advantage where we have developed. Some of the products except metformin. I would say actually our philosophy as a company is to develop backward integration in as many products as we can. So what we've done is we've really secured the commercial end by launching the products, and we understand that we are currently doing business at lower margins, perhaps because we are not backward integrated. But as we get backward integration, say pantoprazole as one example, you will see that benefit accruing into our P&L.
Okay. What is the volume number for ibuprofen in 1H22?
Can you repeat your question, please?
The volume that we have done for ibuprofen in 1H22.
So our current, volumes are between 60 to 65% of our asset utilization, and we believe this number will go up in the coming quarters.
And we have a 12,000 MTPA capacity, right?
That is correct.
So this, how much was this, in say, 1 year, back, or maybe, how much have we seen as a peak in terms of utilization from this capacity of 12,000?
So, in terms of peak capacity, we believe that, we can go to at least 85-90% utilization, and we've done that in the past.
So 85-90% of the 12,000. So we've sold around 10,000 on a run rate.
Yeah, we've sold more than 10,000 metric tons on an annual run rate.
So there is a 20 to 25% dip in that previous demand. Is that correct?
That is correct.
Okay. And what is the pricing now? I mean, in terms of dollar per kg for ibuprofen?
So, it really varies. I would say $11 to $12 is a reasonable number to assume.
$11 to $12. Okay. So, the question here is that almost every quarter or maybe every 6 months, the investors are asking this question. Is this the bottom price? And we have been indicating that this is the bottom price, and we've seen that from 15 levels to 13, and now we're talking 11 to 12. Seems like, despite being the market leader in the product, the pricing is kind of really volatile and not in our, too much in our grip. Mm-hmm. Again, I'm asking the same question. Is this the bottom as per you?
Yes, absolutely. We've done very extensive benchmarking in terms of, different processes, what are the manufacturing costs for each process. So we are very, very confident that this is the absolute bottom pricing that we are seeing today.
And what is the reason why we say this? I mean, that this is the bottom. What is the logic behind it?
Two things. One is, of course, that there aren't too many suppliers of ibuprofen to begin with. Ibuprofen as a product will continue to be a key product in the market. It's very well tested. It's one of the safest products in terms of efficacy and use. And millions of customers around the world rely on using ibuprofen. So there is a bottom demand, and as long as that demand remains as a bottom demand, we believe that there will continue to be a bottomed out pricing. Otherwise, companies will be forced to exit the business, and that is something the customers don't want.
So what is that bottom demand? It's like 50,000 MTPS is like a bottom demand, do you think, for this product globally?
What was the number you said? I couldn't hear that.
50K, I said.
50,000.
You can tell me your number.
No, 50,000 is actually much more than the world demand. We believe the world demand to be between 35 and 40,000 metric tons.
This is the bottom demand you're saying. In the worst case, this will be the demand. Even if 50.
Typically, this has been the market demand. This number might be off by 10% to have the bottoming out effect, but really we don't expect that to go below 32 or 33,000 tons a year.
Got it. And in the US, are we selling ibuprofen now, or we not still?
So we've just started. Some trials have been ongoing. This was the first year we've received some approvals. So I think in the next financial year, you will see some commercial quantities going into US.
Okay. And what kind of gross margin should we expect at a company level for the third quarter and fourth quarter? Because it's been so volatile. We would really need some help on this from you, please.
Okay. I would say that, for all API companies in general, as an average, companies operate at gross margins of, between 25-30%. And that's the range that we certainly hope to meet or beat in the coming quarters.
But ours was, higher than that. Ours was in the mid-30s zone. So this should be the new normal for us, 25%?
So this is not the new normal for us. It's hard to commit to a number right now because I don't want to look at it on a quarter-by-quarter basis. There are multiple moving parts here. As my asset utilization improves, my average cost goes down, and therefore, my profitability improves. As my volumes go up, my ability to source raw material improves, and my gross margin improves. So there are so many moving parts here that I don't think that is the new normal. But yes, 30% is certainly something that is quite doable and within striking distance for us.
Okay. And any color on the specific pricing on ibuprofen in US when we sell versus other countries?
No, I think it will be similar to what we sell in Europe and other regulated markets. $11 to $12 is the current number for Europe and other markets, or it's a mix for our domestic plus. What is the number for exports versus India for us? Is there a significant difference? This is a blended price.
So exports would be 13%, $13 or something, and India will be at 10. Is that the correct way to look at it?
So, right now I don't want to commit to that number only because, we are entering the US, we are late entrants. So, as that business picks up and stabilizes, that will be the time to look at the new pricing. But on a blended basis for the year, we will be between $11 and $12 a kilo.
Sure. Okay. Thank you for patiently answering my questions. I understand it's been a tough quarter. Wish you all the best.
Thank you.
Thank you. The next question is from the line of Krishnan Verdi from ICICI Bank. Please go ahead.
Hello, ma'am. I had the same doubt for the inventory as the previous person, so my doubts are cleared right now.
Perfect.
Thank you. Anyone who would like to ask a question, you may press star and 1. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Bharat Sheth from Quest Investment Advisors. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, if you can give a little more color on, you said this ibuprofen demand is around 33, 34, around 35,000 annual demand. So how this demand is growing, at what percentage level normal, and how is the supply situation? Is supply is also affecting the pricing pressure?
So there are roughly, you would say about 4 or 5 key suppliers of ibuprofen worldwide. You've got a Chinese supplier, you've got one US company, and of course, one European company and 2 major suppliers from India. Having said that, the capacity situation is that all the demand in the world can be met based on current capacity, so you don't see any capacity additions being done. And I think it all comes down to asset utilization and pricing. So worldwide ibuprofen as a business, as a product, is growing in single digits. So this is not this is a commodity API that grows more or less in line with kind of global GDPs. So we are very confident of our capacity, and based on our understanding of competitive capacities, we are confident that we don't expect any new entrants or new plants being built in ibuprofen to cater to the current demand.
But as you rightly mentioned, sir, recently this new European player has just commenced the capacity, which was earlier not there. So so how much that capacity has come up?
So I think no formal numbers have been released for that, whereas the capex that they have incurred for that capacity is something around 200 million euros.
Okay, and that has just commenced, recently for last 6 months, correct?
Correct.
So is it also causing a pressure on the pricing as well as on the demand side, that some of the customer might have been diverted to them?
So it is causing some concern on the supply side, maybe not on the demand side. Having said that, as I just mentioned, a 200 million euro capex for pick a capacity of your preference will add significant cost disadvantage, because the fixed cost allocation on a per unit basis from a 200 million euro plant is going to be substantial. So we don't believe that will really add to the pricing pressure. But certainly, as new entrants, everybody wants to come in, but at the same time, they also want to maintain certain margins. So you have seen what the typical margins are for the European player. It is reasonable to assume that they will not enter a new business and sufficiently sacrifice those margins.
Okay. And can you give some color on the medium-term outlook for this ibuprofen whole demand-supply scenario? I mean, as you rightly said, that once the demand keep on increasing, we may see after a couple of years pricing also improving.
Yeah. So I would say that for a market that is between 35 and 40,000 tons, this market had contracted in terms of demand to maybe around 30,000, and within the next 2 quarters, it will be back to 35,000 levels.
So that also there is some hope of improving the price also, correct?
Yes.
Okay. Thank you very much.
Yeah.
Thank you. The next question is from the line of B.R. Vora from Third Eye Realty and Consulting Private Limited. Please go ahead.
Hello. Thank you for taking another follow-up question. My question was regarding the domestic and export market. Our domestic sales have gone down in this quarter, but the exports have grown. What was the reason for the domestic sales going down this quarter?
So, 2 things, one is that the domestic one, in terms of volume, I have not shown that separately. Some of the pricing of the products was down, and that is what reflects in the domestic demand being down. Whereas in the exports, both my pricing and my volumes were up.
So the volume was the same in the domestic market, right?
Yes.
Okay. Thank you.
Thank you. The next question is from the line of Dhaval Sangvi, an individual investor. Please go ahead.
Thank you for the opportunity. Sir, I have more broader question. Where do we see ourselves, 3 years down the line? I mean, what kind of revenue are we looking at? Because I remember 3 quarters back when we had that discussion with the outgoing CEO, he did mention that we'll grow around 18 to 20%. So maybe by FY24 we are looking at somewhere around 2,800, 2,900. Are we on track, or is there a change, or if you can let me know?
We are on track. I mean, I think 15 to 18% kind of growth is a reasonable number for us, and we will certainly in the next 2 to 3 years be achieving or exceeding those numbers.
Okay. I mean, what kind of EBIT margin are we looking at? I mean, what range, if you can help me?
So I would say, a 20 to 25% EBIT margin is a reasonable target for us to hit.
Okay. And then again, from 3-year vision, I mean, what percentage of exports we are looking to target?
So I would say that, our exports are currently in the 25-30% range. In the next 3 years, we are looking at exports that will be well beyond 40%, 45%.
Okay. And then in terms of, our segments, right, pharma versus chemical, what kind of percentage are we looking? Is it equal, or how do we see that?
So I would say, rather than look at the percentage of business that is A or B, it is perhaps more relevant question that will we grow both? And the answer is yes. We will grow both the chemicals and the pharma. And needless to say that I am constrained on my capacity on the chemical side. Therefore, the only way for me to grow the chemicals business is to either add more capacity or add more products into my portfolio. And those are the kinds of discussions that are under evaluation. And by end of December, early January, we'll roll out that plan.
Sure. Thank you so much.
Sure.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Ashit Koshi, an individual investor. Please go ahead.
Good afternoon, sir. I had a question on, we have given 3 categories, chemicals, and then pharma. So chemicals we have shown in this quarter as first half as 57%, compared to 35%. So this is a volume-based growth as well as value-based growth?
Oh, this is actually, you're right. This is, our volumes are pretty static in this. We do about just over 100,000 tons of ethyl acetate as primarily contributing to this business. So most of the numbers that you see here are price related. So as the price of ethyl acetate changes, that number changes.
Okay. So what you mean to say is the production or the output remains static or flat, but it is the pricing which is deciding your overall contribution.
That is on the chemical side.
Chemical side. That's what I'm talking about. And in that scenario, how much chemical is contributed to the bottom line?
So most of the contribution to the bottom line has actually for this quarter come from the pharma and not the chemicals business.
Sorry?
Most of the bottom line has come from the pharma side and not the chemical side.
No, but can we get some number breakup of that? I mean, it's a chemicals, ibuprofen, and other pharma products. 3 categories you have mentioned: 57, 29, and 14. So that's a revenue numbers or sales number, if we put it. So compared to that, on the bottom line, the net profit figure, if I have to divide in these 3 categories, what would be that?
So we have not released those numbers, and let me see the numbers I have in front of me.
Sir?
Yeah. Just give me a minute. I'm opening the P&L. So in terms of the profits, the chemical was barely 10% of my total profit. 90% came from the pharma.
So this chemical 10% profitability, if I have to bring it at least somewhere around, just as a ballpark figure, 20-25%. To that level, if I want to reach, what kind of changes I do need to make in the chemical business? Because dependency on one product for profitability is becoming a problematic situation for the company, right?
Yeah, so historically, the chemicals business has been run at no more than 10 to 12% EBIT margin. Okay, and that is the industry reality, not only for us, but all the players who are in this particular product line. And the way for us to improve our profitability to that level is essentially through better pricing and better sourcing of raw materials. And of course, capacity utilization.
What is our current capacity utilization on chemicals, sir?
It's close to 100%, and we continue to churn out as much volume as we can by improving our contracts, by improving our procurement rates, and the ability to manage that volatility in raw material pricing with the pricing of our product to our customers. That's really what will help us come back to those profitability levels.
So product mix in chemicals you will need to work on.
Yes.
And on the product application, what you have shown: food processing, flexible packaging, pharma, chemical intermediates, textile, ink, paints, and pesticides. If I have to under each head, if I have to give the numbers, the sales numbers.
No, we don't break apart those sales numbers based on the segments that we serve.
The reason for this is which segment possibly would provide further impetus to the top line as well as bottom line. That would give an idea. I mean, ibuprofen as of now is a major product, and which would remain for maybe another couple of years. But further growth, if it has to come, from which segment would do well, which would give us an opportunity to grow faster.
Okay. So I would say that, ibuprofen has growth opportunities that we will certainly monetize. Ethyl acetate is pretty much plateaued out in terms of top line, and we are in the process of doing things to improve the bottom line there. But to grow the chemicals business, I need to add more products into that portfolio mix. And as far as pharma growth is concerned, the growth will come from a combination of growing the ibuprofen business, but growing the non-ibuprofen APIs much more than the ibuprofen API.
Thank you. I would request Mr. Soti to rejoin the queue for follow-up questions. A reminder to all the participants, if you wish to ask a question, please press star and 1. The next question is from the line of Mohammed Ayaz Sheikh from Aman Investments. Please go ahead.
Thank you for the opportunity again, sir. Sir, I was asking about, in last conference call, you told that the shipping charge for the export has significantly risen. So those charges are normal now, or still you are facing higher charges for that?
So we have started to see easing of that, and I think going forward, once the Christmas season is over, we do expect a significant drop in those prices.
And sir, in terms of, actually, sir, we are investor. We are really concerned about our investment. So my question is, how much margins you are seeing in Q3 and Q4? EBITDA margins.
So, you will have a significant improvement. As I said, Q2, things have bottomed out, and we are seeing improvements in there. Q1, our EBIT numbers were about, 19-20%. Q2, they went to about 10%. I think going forward, it is reasonable to assume that we will come back to an EBIT number of around 20% by the end of the year.
Thank you very much.
Thank you. The next question is from the line of B.R. Vora from Third Eye Realty and Consulting Private Limited. Please go ahead.
Yes, sir. I had another question about the expansion we talked about. All the expansion we are thinking of doing, will it be from the internal accruals, or will we think about obtaining debt or any other financing mechanism to expand the business?
So most of our expansion that we are currently foreseeing is from internal accruals.
Okay. And on the margin side, we're already doing great on the manufacturing and the operations in the business. So do we look at any high margin businesses like contract manufacturing?
So, say contract manufacturing, when you say, I'm assuming you're talking in the context of CRAMS.
Yes, CRAMS.
Okay. So CRAMS is, on the surface, it appears to be very similar to APIs. But if you look at the success factors in CRAMS versus generic APIs, it requires a very different skill set and a very different capability. So for us to do that, even if we were to get into that area, will require a significant investment in upgrading our skills. So if you ask me today, am I set up as a company to do CRAMS? The short answer is no. But if the question is, do I have the capability to upgrade my ability to be in CRAMS? The answer is yes. And that is what is one of the growth options under evaluation right now.
Right. And I had one last question. It is in the long term, what part of the business do we see the most growth from? Whether it is from the API side, or do we think of going into other business segments, or what kind of molecules you're looking for growth?
So we see a lot more growth for IOL coming from the pharma business as opposed to the chemicals business. Within the pharma business, we will grow in the non-ibuprofen APIs much more than the ibuprofen APIs. And the last question that you asked me was, what kind of molecules will we be doing? We will be doing what I call relatively high volume APIs as opposed to low volume. So, high potency APIs is not something where we look at growth, because that's not consistent with our skill set, background and experience. So we will look for molecules that are relatively high volume, good pricing, where we have an advantage of doing backward integration.
Right. Okay. Thank you for answering all the questions during the afternoon.
Sure.
Thank you. The next question is from the line of Ashit Koti, an individual investor. Please go ahead.
Thank you, sir. My question again, sir, with regards to our, as the last gentleman asked, our expertise is more on high volume bulk production and going towards maybe a lower margin but high volume game. That's what our expertise is, and it will remain the same.
No, let me correct. Yes, our expertise is high volume, but not necessarily low margin.
Okay, sir.
So we will continue to look at products that are high volume products. We will continue to look at products that have the capability of delivering 20% plus EBIT margins to our overall business.
And we do not have any major capital work in progress or major expansion in pipeline right now.
No. The only capex that we have ongoing is the delayed project, unit number 9. That is a multi-product facility that should be up and ready by the end of this quarter, and that's the only one.
And when I would compare the first half results, where my profitability has gone down substantially with the first half results of previous year, that breakup of fall in the numbers, I would appropriate towards logistic this much, raw material cost increase this much. Can I have some understanding if I have to divide that fall into multiple heads?
I would say cost of goods sold as a broad bucket, where my gross margin went down by about 10 percentage points. Most of that was in raw materials, and some of it came from fuel and logistics.
So we assume that 80 to 85% or 90% is towards raw material price rise.
I don't want to give you a specific number, but most of the cost increase that happened was in raw materials.
Thank you, sir. Thanks a lot.
Welcome.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Dr. Sanjay Chaturvedi for closing comments.
Thank you. So in concluding remarks, this past quarter was a challenging period where despite strong headwinds, the company has managed to grow the top line and sales by about 2%. The bottom line has contracted and is now expected to correct in the subsequent quarters. We are confident that the company will be able to deliver industry-level EBITDA margins of 15 to 20% on a sustainable basis. Thank you very much for your valuable time. Have a good day.
Thank you. On behalf of Antique Stock Broking Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.